A quick explanation of my backside head and shoulders short pattern for small caps. Really solid day today, November 8th, NVLN, huge move up and down. I took it 3 times, 1 loss, 2 wins, and a very solid day. Had a couple other trades as well, but this is going to be my main focus to explain to you guys how and why this setup triggers for me. My number one setup is false breakouts, and unfortunately that doesn't always trigger as the new highs are not always formed. So it's kind of frustrating to see a stock just fade without you when it doesn't trigger for you when you're waiting for it all day. So right here is the head and shoulders pattern that I love, that I'm working on improving, and today it paid off really nicely. So I'm just going to draw it really quickly. So this is a typical head and shoulders pattern. You have your head, 2 shoulders. Well, what's actually going to trigger me short? So let's draw some support levels. You have your support, and then this support is also the previous resistance, which is key. So you have to have some new highs formed. So you have a consolidation and a breakout. Same thing as here. So this could have been the shoulder, this could have been the head if this never happened, but it did happen. So you wait patiently. Then you finally get the snap of the neck, and it goes into the second shoulder. So you wait for it to make a significant move, hopefully find support in this area here at the previous support levels. It retested once, so after it broke down, retested once, and retested the second time. That's the key. Retest second time, or at least the first time, but it has to break down significantly. If it retests and it fails, you could short it and then ride the wave down, set a stop above that, and that's what I did. So I had a short at 198, and my stop was at 203. Then I tried to add 500 shares more. So I had 500 shares, and I tried to add 500 more. I only got filled with 200, so I had 700 shares, and my average was 197 with the stop of 204. So that's only a 8-cent stop, which is about $50 in profit if you take the loss, which is nothing. So this trigger right here is very safe for me, and I see it clear as day. That's the biggest thing. You have to study these charts, and you kind of have to come up with the trigger for yourself. So head and shoulders is a very common pattern, but when do you actually get in that it's safe for you, that you understand when to get in? That's up to you. This is what I like to see: a retest, the second retest especially, and then rejection. So I shorted right away and set my stop right here, so it's nice and small, because if I try to short it here, that's a big stop, and the risk to reward is just not there. Let me show you a couple other examples of this setup. Alright, so I don't know if you could see it, but I see it very clearly. You have your head, you have your shoulder, and you have your second shoulder. And again, you gotta draw your support and resistance levels. So again, the previous resistance here is now a support. So when that support gets broken, it goes down, retest once, retest the second time, then you short it right here, and you get a nice move. So this one wasn't as significant, but if you short it in this area and you set a stop at the highs here, it's still a very good risk to reward. Especially if you get patient, but this was already way too late in the day, so to hold it would have been tough. But let's see, 295, and let's see what's the realistic entry. I don't know what the spread was on this. 360, so let's say you short at 350. So 350, you set stop at 10 cents. You still get 5 Rs, so it still works. And even get it more here. So beautiful setup, and I have one more example. Alright, here's another example. So this is obviously a little bit of a different variation, but it still works the same way. So you have your head, big shoulder here, and then you have your second shoulder here. But the whole point is it makes a new high and then tests the support multiple times, then finally snaps the support, which is the neck. It tests once, retests the second time, you short it, and look at that. This one is just a pure home run, easy trade, low risk. You just have to set your hard stops and you write it down. So this one was solid. This is my false breakout strategy here. I took it for a small gain. So yeah, that's the Head and Shoulders false breakdown. So again, break of the support, retest once, retest twice. If it fails, short it on the bid or wait for the ask to get you filled. Set a stop and let it ride. Alright guys.